I'm with Rick Lacaille, the CIO at State Street Global Advisors. Rick, very good to see you in these strange pandemic times. When everybody's talking about ESG at a pivot point, at a turning point, what does that mean for you?
Well, I think the pandemic has had a pretty significant effect on everybody, but one of the things it has done is remind people that prevention is better than cure. And I think a lot of the ESG philosophy is really about looking ahead and anticipating risks and opportunities that may not have been spotted and building them in. So I think it's an important reminder that these long-term issues are often about prevention or anticipation of risk. And that, so there's a kind of reinforcement behind maybe what we should have done or a response that should have been taken on the pandemic and ESG. I don't want to strain the analogy too much, but I definitely think there's a link there.
Yeah. And short-termism, long-term investing, is there a paradox there? Do these things need to be reconciled in your mind?
I think it's often said that capital markets are short-term, and there are examples that people give of investors focusing a lot of attention on quarterly earnings, for example. Equally, I think there's counter evidence. If you look at the valuation of long-term growth stocks, it's reached very, very extreme levels. And I think if you look at life through the eyes of a value investor, you would say, he or she would say that people are really placing enormous value on these very, very long-term cash flows and maybe extrapolating current trends much too far into the future. So I think it's a little bit difficult to say whether the market's short-term or not. But I think one thing is certain, that when you have a very well-diversified portfolio, most of the value in that portfolio is actually in the out years. So it's very important to maintain focus on the long term, not get too distracted by short-term issues. And again, I think that's a reinforcing issue for ESG, because many of these are, it's an unfortunate sort of visual metaphor, but they're slow-burning issues that you need to focus on within ESG that will pay off in the long term.
What's the message to clients at this time?
Well, I think that the general message is that we're expecting pretty significant economic trauma. There has been an extraordinary policy response. In our engagement with companies, we've obviously reinforced our commitment to them. We will underwrite equity issues if needed. We'll make sure that those businesses are able to continue. But we also ask boards to focus on issues that are very specific that have arisen during the pandemic, particularly the S of the ESG, focusing on the welfare of the workforce, how they're dealing with the public safety related issues, not in a sense to give them another homework assignment, but certainly to say there are a raft of new issues that have emerged that we think are pretty important in ensuring the long-term value of the companies within the portfolio that we hold. But apart from that, I think many things have changed. In a sense, we've seen a speeding up of history. Some of the trends that were in place already may have been accelerated by the crisis.
Yeah. When you talk of the speeding up of history, what does the asset management industry in particular look like in the future after we get through this?
Well, some of the things it assumed were essential, not beyond the obvious, which is going to the office every day, are changed, and I think they are changed forever. So I think a greater degree of flexibility, and that's not just about whether people commute into London. It's really flattening the landscape. We have staff all over the world. We have staff in Krakow, we have staff in Bangalore. They're able to contribute just as much as a staff member in London or Boston. I think that the elimination of that, some of those geographical issues of needing to be in the same place, are actually pretty important from a staff development perspective. I think we'll also be faster. I think we've already seen that. And perhaps we'll see a little bit of a change in the way that we interact with policymakers, government. We know that government will play a bigger part in the economy, at least certainly for a while. And we're all needing to think, how can the asset management and financial industry interact with government in order to get the economy and people in better shape when we exit? I don't think anyone's got great answers to that, but there's a greater commitment that I've seen already from finance to get engaged with government in a constructive way.
Yeah. Rick, thanks so much for your time today.
Thank you.